This is my Valuex Berkshires 2014 Frontier Market presentation. It's not a stock pitch like the other presentations that were there. This is more of a general information, general guideline to orient you and to have a clear idea on how to invest in frontier markets. This is a 49 slide PowerPoint presentation, so don't freak out. It's not going to take an hour. I have it down to 20 something minutes. The first half of the presentation is very general information, and the second half is mostly this is where the substance is. So I'll be quick and I'll get straight to the point with most of the slides. This is my contacts. You can find out where I am online. Presentation. So basically, this information is about what are frontier markets, how to invest in them, when to invest, where, and why, basically. So the important questions. So why did I choose this topic? Well, basically, Canada is only 3 or 4% of the world's market cap. I'm Canadian, so I need access to other markets. The Toronto Stock Exchange, the main exchange in Canada, is 33% energy, 32% financials, and 3 big telecoms. That's mostly the big stock markets. Obviously, those are rough numbers, but it's very concentrated. And the U.S., we have access. Part of our portfolios in the U.S., so we have access to U.S. market, and still, the U.S. is only 5% of the world population. And the point is, not 100% of investment opportunities are located in the United States. So this is about new opportunities, it's about growth, and it's about diversifying your portfolio. And I don't want to make this presentation us versus them, or developed world's better, or frontier markets better, or emerging markets better. It's really about opportunities and asset allocation. And if you think about it, the world today is different than it was 20 years ago, and it's reasonable to expect that the world in 20 years will be different than what it is today. So you don't want to be left behind. What are frontier markets? The overall definition varies from website to website, whoever defines them. They're formally known as third world countries. They're countries mostly at their early stage development. They're also known as the next wave of emerging markets. They're known for their young population, rising income, growing middle class. They're also known for their lack of market liquidity or the lack of developed capital markets. And the big major reforms are for economic development that haven't happened yet, or are in the process of happening, that will lead to rapid growth and outsized returns. So this is where it gets interesting. What you need to remember here is that 23 of the 25 fastest growing countries in the next 5 years are frontiers. They're 1/3 of the population, so they are an important segment of investment. What's in frontier market? What's an emerging market? What's a developed market? The line is blurring. Again, it depends on who defines these criteria. The main one, the MSCI, which has the ETF, the frontier market ETF, one of them, they define these countries and what they are, emerging markets or frontier markets, and it's not very clear. It's obviously not as cookie cutting. The FTSE, the World Bank, IFC have other classification system, and for example, South Korea to the FTSE is developed, but for MSCI, it's an emerging market. And I've been to Korea; it's very developed, it's fine, but it depends on the criteria. Some countries should be in frontier markets, some countries should be in emerging markets. So there's not a clear definition, and there's not like a clear line. You are frontier market, you are emerging markets, because very often they're lumped together. There's some notable differences. Emerging markets already have that economic liftoff. They already have that rapid growth. They already have these big reforms that put them in that spot. They're more accessible. They have a stronger institution, and some of these countries have economic output comparable or even higher to some developed economies, and so that puts them up there. A lot of people see that emerging markets and frontier markets are they correlated? Are they not? No, they're not. This is just a 1-year chart, obviously, from October 2013 to October 31st, 2014, and you see that they don't have, the frontier market had a 36% return. Well, the emerging market ETF iShare just over 1%. And you see on the two big drops here. There's one in May 2013. I don't know if you remember. It was the interest rate of the Fed. There was a little tantrum there. They might raise the rate quicker than expected. So you saw emerging markets crashed, and then they bounced back a little bit. And then you had again in December 2013. There was the thing with the 10-year yield U.S. Treasury bond going up, and you saw another mini tantrum. And there's some the stats here are the MSCI at that time in December fell 1%. Fell 6%. But if you had a mutual fund, a pure frontier market mutual fund, you only had 1% loss compared to 6% or 12% for the MSCI emerging market at the time. So this is a little side note, but they're not 100% correlated, and there's many reasons for that, and I will get into. Quick overview of developed countries. I don't want to put too much time here, but the main thing is that most asset classes up here, are trading at fair value or fully valued, and are known for their aging populations. I mean, just not even countries, but most of them, especially Japan, are affected by aging population, which can bring numerous problems. Quick note on perception versus reality. The perception that the frontier market perception is that they're highly indebted, in poor fiscal shape, It's the wild west of investing. It's corrupted. You have to bribe to get ahead. Terrible corporate governance, mismanagement, genocide, despots, all these things. It's not 100% true. There's obviously these problems exist, but it's not the reality. And that stuff was fed to us basically by mainstream media and pop culture. It's not exactly what's going on. The reality is that there's a growing middle class in this country. Wages are increasing. These people want to buy cars. They want to buy a home. They want to buy goods. They have lower debt to GDP ratios than developed markets. And most of that debt is, infrastructure debt that comes from the IFC or other development banks. Corporate governance is increasing thanks to, foreign direct investments and increasing standards. They're not as correlated, frontier markets are not correlated to the current global economy. And part of that is because, well, one, they don't have as much debt. And two, most of the companies on the ground are mostly dependent on local factors. They're not really affected what's going on Wall Street and what the Fed's doing and all these things. It's very, very dependent what's going on, locally. That's the main driving factors behind a lot of these companies. Just this picture. Just want to know here, it's a perception picture. This is the map of Africa with the United States inside it on the left, and on the right you have the United States, China, India, and other countries. And I just the point I want to make here is look at the size of Africa. Like when you look at the globe or a map of the world, yeah, Africa's big, but I don't think you see it as big as it is until you put the United States in it, and it's like, wow, look at this, it's huge. And obviously it's not, it doesn't reflect the size of the economy. Obviously the United States has the biggest economy in the world, but it's just to give you an idea of the potential opportunities that are available. So why would you invest in frontier markets? Well, one, it's about showing up the party early. right? Be there, have the first mover advantage, get a head start, get the companies with the most attractive valuations. Get there before the herd show up. Once the herd showed up, they'll drive up the prices. You'll have a bubble, and usually that's a good time to get out. Position yourself where the growth will be. You want to catch that future growth. And the whole thing is, there's great businesses there. There's not just great businesses in the United States or Japan or Canada. There's great businesses everywhere, and you can find them. And you can find them at attractive valuations. And the point here, the point of the frontier market is to invest in before it was cool, right? And to invest in the brick, let's say, before it was cool. Before the brick was a buzzword, it was a little bit too late to catch most of that growth. When it became cool to invest in China or Brazil or India, you missed a giant growth wave. So the point here is to invest in the next cool acronym. You want to be there before it gets its own, Twitter hashtag and all that stuff. And imagine if you could invest in Japan right after World War II, or Korea in the 60s or 70s, or Thailand 40 years ago. It sounds crazy, and at the time, these regions sounded uninvestable. You were never thought of investing there. It's very, very contrarian. In hindsight, it looks like a no-brainer, right? If I tell you today, hey, and would you have invested in Korea in the 60s or 70s, you would have been blinked. You would have done it. But, at the time, especially without the access to information we have now, you're lunatics. And because of that, a lot of people missed out on some very nice growth opportunities. Why would you invest in, the second part of investing in frontier market? I'm just going on here on what I was just talking about, but these countries, they need foreign direct investment and everything, cheap workforce, cheap labor, low correlation to rich countries. You can find attractive valuation, and there's a phenomenon going on right now. It's called the reverse brain drain, which are, people who left their countries to get educated in excellent, cool schools in the United States or Western Europe or Canada, and they're going back home. They're going back home. They're very educated people with a Western education. They're going back home, and they're bringing their brain power, and they're bringing the resources with them. So that's really good for the country. And also these countries like Bangladesh or Cambodia, they really benefit from, their foreigners sending remittance money back home. And also, in frontier market, if you do your homework, you can exploit the inefficiency of the market. You can exploit the gap between price and valuation. There's a lot of that, and that's caused by a lot of things such as lack of liquidity and these things. You can take advantage of that. So what do you look for? I just don't want to make this too long, but the point is that just having the right demographic is not enough. Okay, you don't just invest in a country because it has a young population. That's could be a starting point, but there's other things. You need the right legal framework. If something goes bad, can you get a fair deal? Right? Can your contract be enforced? Is the country open to foreign investors? Are they embracing free market principles? Are they pro-business? What about the government? What direction are they taking? These are some of the elements, criteria that you need to look into. And does it have a pool of quality of potential investable companies? Are they developing capital markets? That might be good, in case of entering and exiting as an exit strategy. Obviously, a major point here, which I'll talk about later, is management. Very, very, very important. Okay, you don't overlook that point. It's probably the most important one on the list here. And make sure that the country is embracing the right policies that will raise the standard of living and that promotes economic growth. Here, this is obviously a small list, but here's a list of recent countries who did it right. South Korea, Japan, Singapore, Thailand, and Botswana right now are countries that mostly except for Botswana, obviously, but South Korea, Japan, and Singapore and Thailand have no natural resources, no nothing really. They were really poor, and Japan, South Korea are in my mind obviously developed countries. Singapore too, they're rich countries. Thailand's getting it's a medium class country now, and Botswana is getting better. These are countries that adopted the right policies, and now they're benefiting from it. They're role models really for other countries. Wrong recipes, well, there's many of them. There's a short list. When we think of Argentina, Argentina used to be one of the richest countries in the world when a while ago, and it was labeled the Paris of South America. It was classified as the developed market. Today, because of terrible policies and reforms and etc., Argentina is not classified as a frontier market. And we know the story. They were serial defaulter and all these problems. But, you can go from rich to poor, just as you can go from poor to rich. Myanmar, too, used to be the richest country in Asia in the 60s. And we know what happened. The country closed itself off from the world. The military took over. And now it's one of the poorest countries in the world. We know what happened with Greece. Mongolia, well, a little exception to the list here. Mongolia was doing fine. 2009, they had a brand new Foreign Investment Act drafted up. It was accepted. It went well. A lot of foreign investors poured money in the country. 2012, new government, and it decided to rewrite the Foreign Investment Act, and it spooked a lot of people. A lot of foreign investors left the country. Massive capital exit. It got a little better. They make adjustments, but it's just to tell you the story is that capital, moves, and it's very, it moves fast, and it can build economies or it can destroy economies. And right now, France, I'm a little worried about France and the direction they're going. It's obviously, we'll see what happens. Is it, the next Greece? We'll see. We'll see what happens in the next couple of years. You want to invest in frontier markets. The moment to invest in frontier markets to get the best bargains is obviously not just frontier markets, but any markets. It could be your home economy, your home country. It is when the outlook looks the most miserable. When there's no buyers and just sellers, you'll get the best prices. And these countries are ignored due to multiple reasons. They just don't get sometimes you just don't get the exposure that they need. The cameras are not on them. The herd, the hot money didn't show up yet. So that's a good time to start looking. Countries are interesting after a war, a crash, recession, a cycle bottom, a commodity, after a commodity bottom, all these kind of things that you can look at them. Also, you might want to look when major reforms are on the way. And some of the reasons, that you can get the best deal, low price to earning ratio. And obviously when the mania is here, when the hot money is here, you get out. This is going on from what I was just talking about, but you're looking for ideas. Look at local stock exchange and look at local newspapers and read what portfolio managers are saying. Look at 13F filings, list of holdings. Look at index components. These are all good ideas, good places to get ideas and to start looking. For resources, you have the foreign, like I just said, like foreign stock exchange and foreign paper. Look at industry association, these kind of things. Foreign chamber of commerce, foreign financial websites. They're good places to get started and to do your homework and to do your research. General risk, I won't spend too much time here. This is what you would find in a standard mutual fund disclosure. Same here, Advice approach. Some advice is that you don't just invest in a country if it has a high, GDP growth. These things, especially in frontier markets, are less relevant. They sound good, but they're less relevant. If you know, let's say a country grows at 8% a year, well, you want to make sure that you invest in the right companies to take advantage of that 8% a year or more. Other frontier market advice: be skeptical of local brokers or analysts. These guys are always bullish because doing otherwise in these countries, you're seen as a traitor. It's seen as unpatriotic. Okay, so you always see these guys pumping the local companies, and you know, it's the same thing here. They're usually after their own interests, right? They want to increase the size of their fund. They want to increase the size of their corporate finance or investment banking arm. They're looking after their own interests, and that's normal. And so do your homework and make sure you understand the interest behind the analysts and the investment bankers. Don't rely too much on statistics, local statistics. They are understated, right? They don't take into consideration the underground economy, the household economy, and bothering all these things. They're not reflected in the GDP numbers. Things like I just mentioned, high GDP rate, the emerging of a middle class. These are all gimmicks. They're all marketing stories for fund managers. This sounds good, and young population, this and that, the next big country, don't miss out. Usually, they're more gimmicks and the marketing tools. Okay, so just do your homework. Very important in the list here. Do not ignore management. It's very important. I mentioned earlier. I'm mentioning it now, and I will mention it again later in this presentation. Make sure you invest in businesses that you understand. Make sure you understand them. Right? Not because even if you don't understand them, if it's a local company, don't get out of your comfort zone. Really, focus on the blue chips. Focus on the best companies. Right? Go in these countries and what are the best companies, what they're doing, and what's their valuation. Very, very important here. I prefer companies that pays dividend. The reason is that a company can fake earnings, you can play with the numbers, you can manipulate numbers, but you can't really fake a dividend. And when you pay dividends and they have a history of paying dividends or rising them, that tells you that management is shareholder oriented, that the interest is aligned with the shareholder. And they have to do everything, in order to get these dividends out. So that's, at least I like seeing that. It's a good point to look for. Pick a broker that's recommended by Westerners or has some kind of Western route. Okay, a lot of foreign brokers, you have to deal with front selling and other issues. It's just better. It's a recommendation from and always double check. Try that. Do the exercise yourself. You get countries like Pakistan and these places, talk to 2 different brokers. You'll have 2 different stories. Even when it comes down to opening an account, you'll see that's interesting. Some brokers will take half an hour, an afternoon, and other guys will take a month. And different papers, different requirements. It's really interesting just by talking to them to see what they can do. Do business with the biggest bank. Just do that. Save yourself the hassle of small banks and problem. Do business with the most reputable, biggest bank in the country, and verify if you know the auditor. Okay, the auditor, Deloitte, KPMG, PricewaterhouseCoopers, they are in Vietnam, they are in Cambodia, they are in Africa, they are there. All right, make sure that you understand the auditor and who's doing the books. Obviously, some of the headaches. If you do direct investing in those countries, you buy companies directly. You might have to deal with some of these issues here, among others, obviously. Management. Well, here's the thing with management. I like saying this, is that approach management like you'll be building your own fantasy football team. Right? When you build your team, you leave no stone No stone is left unturned, right? You check the stats, the tracking, the projection, your history, comparison. You go nuts. You spend way too much time. But management, we tend to take it for granted, or we tend to overlook it. And sometimes in business, it's not obvious. We don't have stats, so we have to, we have to rely on operations. Are they good? Are they good with operations, and how are they doing with capital allocation? These are two things you can start with, but and these, study the history, study the experience, and call them. You can call management, talk to CIO, meet them, talk to CFO, you meet them, get a sense of where they are. Are they there for the shareholder? Are they there to for their own pockets, or they're there to make the company better and to represent the shareholder? So, these are things you can do. And yeah, you can hire firms to do background check. You can do that, especially in countries where they have like 2-3 different names, and they can get confusing. There's many ways to invest. Okay, some of you already invest in financial markets, and you don't even know. If you have Nestle stock or Yum, McDonald's, and you are invested in financial markets. You can buy offshoots of multinationals. You can buy stocks directly, mutual funds, ETF, private equity funds, debt market, ADRs, these kind of things. Or financial markets are listed abroad. There's many ways to invest in financial markets. Here's some, a list of countries here. Okay, I won't spend too much time here. Myanmar is, in 2012, did some major reforms. Their quotation reopened for business. Their estimated GDP growth is 8% a year. GDP is expected to triple in the next 20 years. And Myanmar is the Thailand 40 years ago. If you wish you could invest in Thailand a long time ago, you would have done it. And here, Myanmar has a very strategic location. It's next to China, India, Thailand. They're building a giant port. This is the country that has a lot of issues, a lot of problems ahead. And you look at it, you're like, I'm never going to invest there. But that's the financial markets. And they have the election coming up in 2015. We'll see how that goes. And obviously this country is going to grow, but there's going to be a lot of roadblocks and a lot of problems ahead. It's going to be a lot of up and downs. So you have to, understand. You have to understand. Africa, 57 countries, 19 stock exchange. And, there's a couple of African companies that get listed on the London Stock Exchange. And just a quick note here, I wrote down the banks here because they're very often popular investment. You see Nigerian banks trading lower than Kenyan banks, and the reason for that Kenyan banks are way more sophisticated. They do home loan, mortgages, credit cards, these kind of things. Well, Nigerian banks are more traditional loans and deposit. And ShopRite is a major food retailer from South Africa, but it's all over Africa in 16 countries, 1,700 stores. That's a real business. Sanatel. Okay, look at the EBITDA margins of 51%. Sanatel is a telecom company from Senegal. Enterprise Group Limited, Ghana, a very well-run, fast-growing insurance company. There's obviously some industries in financial markets that stand out more, such as financial services, consumer goods, these kind of things, tourism, power, infrastructure. Renewable energy is an interesting one because they get a lot of support from development banks, so they might get cheaper loans or subsidies, these kind of things. And when you take a financial markets, they're skipping all the steps here in technology. They have flat screen TV. They're not starting with black and white TVs. They have 3G, 4G internet, Wi-Fi. They're skipping everything. Like in Mongolia, they have tents with flat screen TV and satellite and all these things. Kenya is the king of mobile banking. We think of African country, people running around with spears. And it's not what's going on. These countries they're experimenting very fast growing change, and they're adapting the latest technologies. They have iPhones, they have Blackberries, they have smartphones, they have internet. Like it's a misconception that to think otherwise. Some of the notable frontier market companies, some of them are blue chips, such as Square Pharma from Bangladesh. That's a blue chip pharma company. It could be located in the United States. This is, they have state-of-the-art drugs, and they're doing very well, and they're in a bunch of countries. Yoma Strategic, a Singaporean company doing business in Myanmar, a lot of real estate, these kind of things, and the list goes on and on. Quick overlook here: Penamten Water Supply Authority. It's the Cambodian capital water utility company. About 100 million, just over 100 million market cap. Had an IPO in 2012, the first IPO ever, the Cambodian Stock Exchange. This is a very, very, very well-run company with good management. The only issue is that the stock market's not very liquid, so it takes a while to get in, takes a while to get out. This company has 99% billing collection, and yes, you can drink the water in Phnom Penh. You can drink the tap water. You open the tap, you can drink out of it. These guys took a company that was one of the most mismanaged, most corrupt companies in Cambodia, in one of the most corrupt, mismanaged country at the time, and turned it into one of the best water company out there. And they did such a good job. Now they're doing service, consultant jobs. They go to the Philippines and these countries where you can't drink the tap water. And they're telling you, here's what we did. So it's a very, very good company at a very cheap price. Frontier market nationals they're not all little companies with 100 million market cap that can't be traded. These are major 90, 35, 26 billion dollar company that you can have, you can buy. So they're monsters. Or you can take, what the approach a lot of people do is to buy Nestle. Nestle is in almost every country in the world, rich and poor. Yum brands, which run KFC amongst other brands, they are one of the first in these countries. Total, the energy company, they're very active in these countries. Philip Morris, Diageo, Heineken, all these beer companies, they're there. They're all on the ground there, and they make beer. They're very, very active. So if you have a piece of these companies, you have a piece of the action. It's a very, very good way to get involved. The funds, we have the one of the most popular ones is obviously the ETF, the iShare MSCI Frontier 100. It's not a pure frontier market fund. It's probably the one that's the most advertised. It's managed by BlackRock, but it's not pure. 45% of the country weight is Kuwait and Nigeria. So I don't think it's built very well. So it's one area where ETF hasn't done a perfect job yet. There's some good funds here, some names: Templeton, Frontiera, Matthews Africa Opportunity Fund run by Francis Daniel. I recommend you do some of the readings. Asia Frontier Capital, amongst others. These are a lot of them you can look into. And these funds are more pure. I find them more pure frontier markets. That means that they're really invested in frontier markets instead of some emerging markets or some of this and some of that. Templeton, one of the most popular one. I think it's closed at the moment. I'm not sure yet. We'll check. Frontiera Global Frontier Fund. This is a pure one too, and it might be closed at the moment, but you might get on the waiting list. Africa Opportunity Fund, a very good one in Africa. This guy, Francis Daniel, has done very, very well for the investors. Notable region, the ASEAN, very big region. 15 countries, free trade is on the way. They have a combined market cap over 2 trillion, high GDP. This is the zone where a lot of the future growth will happen. I think this is the ASEAN century, the Asian, Southeast Asian nations. A lot of interesting things going on there. You can invest in foreign subsidiary, direct or indirectly. For example, Nigerian Breweries is 54% owned by Heineken, and these companies are owned by major companies, and the idea was to if a company wanted to do business in a local country, they have to list part of their company on the local exchange to help them develop and open the local stock exchange. So that's what happened here. All right, here I'm not saying do this. It's just for informational purposes. Do your own research. I'm not recommending any of this. Okay, so if you lose your money, that's your own issue. But it's very interesting, and it's for entertainment purposes. You can buy North Korea bonds. Okay, defaulted North Korea bonds in the 70s. They're trading for about 15 cents on the dollar right now. So if you're an activist investor and you're proactive, you try to get your money there. It could be a really, really nice return, even if you sell for half your money. I mean, sorry, half the bond value, not your money. You know what I mean? Oricon Telecom is an Egyptian company, telecom company that's owned 25% of Korea Link, which is the local North Korean telecom company. You can buy that and have access to North Korean mobile market, and it's only it's only at the beginning. So that's one way of playing it. You can also invest in Chinese companies operating in North Korea, South Korean companies operating in North Korea, or you can take the alternative asset route, such as coins, stamps, art, these kind of things. Okay. Here's a chart provided by the Wall Street Journal of the subscriber in North Korea. It's growing really, really fast. More exotic. Obviously, that's for entertainment purposes. There's the world's first private exchange in Somalia. You can provide money or other things, such as probably weapons, in exchange for parts of the successful ransoms. And when it opened, there was about 72 maritime companies. You can provide, cash, weapons, these kind of things. They used to do very, very well, but right now, I know 2013 there was a big drop in pirate attacks, and I don't know how they're doing this year. So maybe there's a market bottom. You might want to look into that. And by the way, you're not going to find any info on Yahoo Finance. You're not going to find any info on Bloomberg. Okay, it's not that website's not for that. Here's some of the guys here. I guess it's investors getting their money from the pirate and getting a share. All right, this is the last slide. Thank you for your patience here. Don't buy a stock because it's from an exotic high-growth country. Don't do that. It sounds cool, but don't just do that. Look at valuation. Okay, buy a company that's trading below its intrinsic value. Use margin of safety. All right. Look at the fundamentals. All right. Poke the company from every side you can. Can you see the cash flow cycle? Can you see the money coming in and coming out? This is all little things to test it. EBITDA is usually a good metric, the best metric to compare cross-country companies. I don't need to explain that. And focus on companies that have predictable, consistent cash flow. Don't forget, I mentioned earlier that dividends, companies pay dividends, usually a good way to start because they are shareholder friendly. And very importantly, focus on excellent manager and partners. Management they eliminate a huge portion of the risk if you had good people for you. That's it. Thank you very much.